In the life of every successful startup, the catalyst often is a well-structured business plan. This document is more than a mundane list of objectives. It reflects your business's soul, presenting your vision and how you intend to transform this into a tangible, profitable reality. In preparing your business plan, imagine that you are telling a story, the story of your future business. This narrative will not only guide your team and align their efforts, but also convince external parties like investors of the viability of your venture. A thorough business plan covers everything from detailed market analysis and operational strategy to financial forecasts and legal requirements. It's your roadmap, your pitch deck, and your playbook all rolled into one. The cornerstone of any business plan is the market analysis. This section provides an assessment of the economic environment in which you will operate, highlights your target demographics, and analyzes your competitors. It's about proving there's a need for your product or service and that you understand where you fit within the competitive landscape. Accurate market analysis requires robust research, surveys, focus groups, and perhaps consultations with industry insiders. It's about validating your assumptions with real data and adapting your business model to the realities of the market. The insights gained from this analysis will guide many of your business decisions, from product design and pricing strategy to marketing approaches and customer service. Deciding on the appropriate business structure is pivotal. Whether you opt for a sole proprietorship, partnership, or a limited liability company, LLC, can vastly affect your business in terms of liability, taxes, and administrative burden. For many startups, forming an LLC is a popular choice due to its flexibility and protection benefits. It separates your personal assets from your business debts. However, the right choice varies based on specific circumstances and goals. Consulting with a legal expert can provide clarity. Choosing a structure will also define your path for registration, taxation, and compliance with local and federal laws. It's not merely a bureaucratic step, but a strategic decision that aligns with your business goals and operational style. Registering your enterprise gives it a legal framework, offering credibility and a structure to engage with stakeholders. The process varies widely by state, but typically involves choosing a business name, registering with state agencies, and acquiring necessary licenses and permits. Part of the registration is also deciding your business's legal structure, which we discussed earlier. Each form has its own implications for liability, ongoing costs, and operational requirements. It's essential to make informed decisions early to avoid costly changes later. This step doesn't just confer legitimacy, it's the gateway to other essential business elements such as opening bank accounts and hiring employees. Obtain your employer identification number, or EIN. The EIN is essentially your business's social security number. It's vital for various business activities, including opening a bank account, hiring employees, and filing tax returns. Applying for an EIN is a straightforward process that can be completed online via the IRS website. Securing your EIN is not just a regulatory requirement, it's a foundational step in segregating your personal identity from your business entity, crucial for protecting your personal assets. The process is generally quick, and it's a good practice to secure your EIN early in your setup phase to ensure all other processes can proceed without delay. Preparing the financial projections. No business plan is complete without detailed financial projections. This section lays out your expected income, expenses, and profitability over a given period. It helps you gauge the financial health of your planned business and is indispensable in conversations with potential investors. Investors aren't just buying into an idea or a product, but into a premise that this enterprise will be financially viable and profitable. Thus, your financial forecasts need to be based on realistic assumptions backed by accurate market research and clear accounting methodologies. Your financial plan should be comprehensive, including profit and loss statements, cash flow forecasts, and balance sheets, projecting at least 3 years into the future. Understanding your numbers will also help you manage your resources more effectively and make informed business decisions. Writing the marketing and sales strategy. Your marketing and sales strategy section defines how you plan to attract and retain customers, crucial for driving revenue and growth. It outlines your sales process, pricing strategy, advertising, promotions, and distribution methods. This segment should be directly influenced by your market analysis, aligning your marketing strategies with customer expectations and market demand. It explains not just what you will sell, but how you will sell it, and why your target market will want to buy it. The effectiveness of your marketing and sales strategies often dictates the pace at which your business grows. Therefore, this part should have both creative elements like branding and promotions and analytical elements like sales forecasting and market penetration strategies. Operational plan. Setting up your operational base. The operational plan details the physical and logistical setup needed to get your business running. This includes your location, facilities, equipment, and the technology needed to support operations. It also outlines your supply chain and staffing requirements. Whether it's deciding on a brick-and-mortar store, an office, or an online operation, each choice comes with specific considerations. Your operational strategy should minimize costs while maximizing efficiency and productivity. It's also where you address the operational risks and how to mitigate them. For instance, having backup suppliers or alternative distribution channels can prevent disruptions in the business flow. This area requires careful planning to balance cost efficiency against resilience and agility in operations. Crafting your pitch. Engaging potential investors. The ability to effectively pitch your business idea to potential investors is crucial. This section of your business plan is where you condense your vision, market analytics, operational strategy, and financial projections into a persuasive narrative. Your pitch needs to not only detail the facts and figures, but also resonate emotionally with investors. This means tailoring your pitch to highlight how your business fulfills a market need, the competence of your team, and the potential for substantial returns on investment. Remember, investors invest in people as much as they do in ideas. Demonstrating your passion, expertise, and preparation can significantly boost your chances of securing investment. Essential legal documentation and compliance. Ensuring legal compliance involves more than just registering your business and obtaining an EIN. You must understand and adhere to a range of legal standards from employment laws to privacy policies and beyond. Non-compliance can lead to serious repercussions, including fines, business closures, or legal disputes. It's important to familiarize yourself with the legalities relevant to your industry and business model and engage a legal expert if necessary. Documentation like your articles of incorporation, shareholder agreements, and intellectual property rights should be prepared meticulously to protect your enterprise and its stakeholders. Reviewing and revising your business plan. A business plan is not a static document, but a living strategy that should evolve along with your business. Regularly reviewing and updating your plan ensures that your business adapts to changes in the market or regulatory landscape. It's advisable to review your business plan annually, reconsidering elements like market strategies, financial estimates, and operational tactics. This not only helps in keeping the business aligned with its goals, but also prepares it better for unforeseen challenges. Adjusting your strategy based on real-world feedback and performance analytics is key to staying relevant and competitive in the market. Launching your startup. Final steps and future strategies. Finally, with a well-fleshed-out business plan, the journey from a concept to a full-fledged startup is set to commence. This phase involves implementing your planned strategies from operational setup and market launch to active engagements with customers and stakeholders. The launch should be accompanied by a dynamic marketing campaign to generate buzz and appeal directly to your target audience. Coupling this with strategic relationship building can open doors to numerous business opportunities, As you establish your business, keep in mind that launching is only the beginning. Continuous analysis, adaptation, and growth are necessary to sustain and expand your business. In essence, a well-prepared business plan acts as your startup's backbone, providing structure while accommodating growth. It helps you navigate the complexities of running a business, ensuring that your entrepreneurial venture is built on a solid foundation, ready to adapt and evolve in the face of challenges and opportunities alike.